Okay. Good afternoon, YouTube. Good afternoon. Welcome back to the channel. Welcome back to the stream. As we get everything set up and rolling here on the YouTube platform, I'm going to break down everything for you all. Um, I mean, I created a phenomenal algorithm, a tremendous script on TradingView that basically works with any asset, but you know from my experience in the banking industry, cybersecurity, ton of experience in the finance and tech world. Um, as I built my wealth, you get to a point where it's like, okay, what else is next? How can you help people? And so the best way that I think me on an individual basis can help people is to educate people about how to make money, simply put. You have a little more money, a little extra money, your investments take off, it really increases your quality of life and just reduces your stress and ultimately makes a greater world. Nevertheless, let's hop right in. We've been seeing a ton of movement in the last 24 hours or so with Bitcoin and Ethereum. We started out really well when we got a new president. And then things have kind of been choppy ever since we went to 100K Bitcoin, 120K Bitcoin. We lost about half of that, which is common in crypto. But one thing that we did gain that's way more important than the price movement or volatility is the fact that it's here. Crypto is here. It's taking over. It's in the mainstream. And you have a ton of institutional investments going on right now. All the late banks, all the late hedge funds, all the late private equity, um, late to the party, big money spenders with nothing to do with their money except throw it around. Everybody's getting into crypto right now. I'm telling you right now, it's a big thing. I understood it. Um, you know, from inside the bank that okay, we're doing a lot with blockchain technology, which is the foundation and the ultimately credibility layer of cryptocurrencies. But yeah, it's been a thing that's been going on for quite some time where banks have really been in the industry, but trying to limit the industry because it has a ton of appeal that the banks just don't have. And the banks take our money and they flip it over and over and over again before they let us have it. With that being said, in the crypto space and with Bitcoin and what it provided was a proof of work where you can actually get the same types of yields that banks get on their deposits, via lending them out, going to play the various markets overnight with sweep accounts, etc. But uh crypto kind of equalized that. You don't have enough money in the actual crypto market to really be a threat to big banks. But the proof that we don't actually need banks to do anything, we can bank ourselves, we can have other large, credible firms, independents of the banking system to potentially lend us the same way that banks would for purchasing homes, high dollar value items, such as vehicles, etc. Yeah, we're here now. So, but I digress. Let me hop right in, man. So basically, what I've done is I've created a tremendous setup with only three indicators, one of which I created for TradingView. If you're not familiar, TradingView is like one of the go-to sources for any sort of investor. any sort of day trader, whatever the case may be regarding finance. Um, TradingView has a lot of credibility and people like to use it as far as its resources and capabilities. Now, these three indicators, I'll show you all what I only use. My setups are clean, and I'll break down what all of this means on the screen. Even if you're not, um, an experienced trader or you don't have any technical knowledge, I basically simplified a lot of this. You'll need to get familiar with the layout, but what this setup does with these three indicators, the adaptive trend finder, which I probably use third of all, or I would weight it as number three out of these three particular indicators. And basically just tells you, like, it puts a little two parallel lines that kind of tell you where the price movement is kind of headed. It could be right, it could be wrong, but it just gives you a inkling of the future. Second of all, I will put the Ichimoku cloud. Not to get too much in the weeds, I believe a Japanese person created the Ichimoku cloud. It kind of tells you where, if the price movement is in a positive fashion or a negative fashion. I'm trying to keep everything really simple without getting too much in the weeds, right? But it's really inexact as well, and it doesn't really translate. However, it does give you somewhat of a perspective. Now, there's tons and tons and tons of indicators that you'll come across and you can utilize for, really pertinent data to give you um, some sort of forecasting ability for price movement. Now, what I've done is created a ton of data being pulled from many, many, many indicators and created basically a engine. I call it the OEP Institutional State Engine. And this is version 6.2. Um, and basically what it does is it tells you the state of the market and it kind of gives you a ton of clarity that you wouldn't necessarily have with using 10, 12 indicators at the same time and trying to get an idea where the market will go. No, no, no. This actually tells you with high probability of where the market is going, where the market is, the current state. It emits the current state of the market. So let's say, for example, you just to give you a better perspective and to oversimplify it a little bit. Let's say the market is pumping like crazy, right? This table that I have here will tell you if the pump is sustained or the price going up is going to be sustained, when it's going to fall off, and it's going to do that on a number scale factor. So you'll be able to see it down here. Um, I don't know why, my script table came out near the bottom and it's kind of hard to see. However, I'm going to definitely publish my specific OEP. If you don't know what an OEP is, it's an optimal entry point. So if you make a long trade or if you make a short trade, you want to get in at a price point that has the most potential for you to profit. Right. So with that being said, there's always a time for you to be able to get in at an optimal entry point, and you need to seek this as a trader. To be a successful trader, you have to maximize your wins and you have to limit your losses. There's no two ways around it, right? And what this engine that I created does, it allows you to get into the market at a tremendous point in time if listen to the data, and remove emotion. So there's quite a bit we're going to get through during this stream. This is kind of the first stream. I'm kind of taking the time to really go through it all. I just wanted to test a couple of things out. Let me take a brief break. I'll be right back in about 5, and we'll could go ahead and continue from here. But just go ahead and let the chart kind of tell you what's going on. Right now, we're on a 5 minute. We'll switch to the 15 minute to give you a little bit more clarity or a little bit of a more of a macro view. And I'll hop right in just a moment. Be right back. Okay. Okay, we're back. So let's hop right back in. So what we're seeing right now is Ethereum sitting at about $1,915 right now. Um, uh, if you look at the chart, there's so much data to take away from it, and this data is really important. The chart even tells you, or our engine even tells us when to create a long position. So if you see this where I am right here, I'm right here looking at this green dot right here. If you look at this green dot, it basically has two letters underneath, and those letters stand for a potential long option is pending, right? So I don't know too many indicators, right, that will actually accurately give you when a long has been pending, or if a long or a short opportunity is even in the mix, right? There's a ton of indicators that will give you minor data that really just doesn't get you to the optimal entry point you need to be at in order to maximize your profits. But with this setup and our OEP state engine, it really breaks down where you need to be. So you can see where the price is. At 1865, our chart triggered, and this was on Tuesday at 6 p.m. Now on Wednesday at noon, if you were to enter this long position at 1865 and the price spiked all the way up to 1840, you, depending on the amount of leverage that you use, and even if you didn't get too crazy with leverage, right? The entry trigger right here, you didn't even see the price dip that much at all. But literally less than 24 hours, you could have 3x your money just that quickly. I mean, it's right in front of you in the chart. So, but nevertheless, I want to break things down to you all. I've done a little number crunching. I want to give you all a perspective um, of just what to look out for the afternoon hours, especially what we've done here with um, crunching the data for you. You still need to uh, create your own thesis. You need to create your forecast, even though the data is in front of you, right? So I'll go over my thesis, what I've came up with based upon the data, and we'll take it from there, and then we'll break down a few other things as we move along. But so basically, what we're seeing now is the base case thesis of what's going to happen during the next, let's say, end of close, Wall Street close. So on a higher time frame, we're seeing a bullish trend, but the intraday tape is suggesting a vertical impulse, right? So we're going to treat the $1,920 level through the $1,945 level for Ethereum as a developing balance type of area. Um, we don't want to confuse any sort of activity within the range of $1,920 and $1,945. We need to have confirmations either way that there's more opportunity or more length or range for the price to run up, or are we in such an indecisive scenario where we may have uh, sellers, or excuse me, buyers may have peaked and now the sellers are going to get back in control. So, but our base case still sits at a bullish confirmation. On the 5 and 15 minute close above $1,945, followed by a hold above that point, even if the price is retested or dips below, but it still holds above $1,945, then we can start looking at $1,952, $1,977. And then once we get to that point, we're probably going to hit 2K. So these are things to really look out for. So you still have a run up potentially. We're right now, like I said, we're sitting at about $1,920 almost, right? 1919. If we get to 1970 or we stay above 1945, it's really a high probability that we're going to get to 2K. We're going to be back at 2K, and that's going to be major. So that's the base case scenario, right? Now, if the bears or there's a bearish sentiment that comes on the market with Ethereum, we're going to see it in the chart, right? We're going to see it. And if that occurs, we need to see a decisive loss of $1,920, especially if we dip like where we are right now. If we lose $1,920 and we try to pump above it, maybe get to like 1925, even 1930-ish, a little above, but we fail to end the second half of the day at or above $1,920, that's going to expose us back to 1900 and sub $1,900 Ethereum, potentially down to $1,875 if we don't hold 1920. So, um, but then there's also another scenario, right? We don't have to be bears. We don't have to be bulls. We can, quite frankly, be neutral. And sometimes that's the best option to take is to be neutral in the market because you can save yourself some money. You can save that potential loss. So we'll see a no trade or, some sort of neutral scenario if we stay in between the 1920 and $1945 with wicks on both sides. So candle wicks are, if you're looking at the chart, you'll see these candlesticks, right? All of these rectangular squares, they're called candlesticks. So some candlesticks at the very top or at the very bottom, they have a thin line that's not as wide as the overall candle. That thin line is considered a wick. It's called a candle wick, very much like a real candle where you light the wick. So these price points that we see within the candle wicks can be very telling about the outcome or the potential future price of an asset. So these are things to consider as we get into the second half of the day. Um, with that being said, there's so much more we can get into um, about where the price action and the ultimate headwinds and tailwinds that we're seeing in the market today. So we had a lot going on today. It looks like the new Fed chair, Kevin Warsh, he testified today. He had, quite a bit to say. We still have a lot going on with the concerns about the conflicts around the world and oil prices and energy prices as a result. But however, we've been getting some positive information, positive reports coming in. We just got the CPI report on Tuesday that was much more favorable than people anticipated. And I mean, that's really big. That's really big. Inflation is really taken off in the last few years, um, and we need to figure something out. Uh, Housing costs are astronomical. I mean, remember I made six figures during the pandemic off some real estate endeavors, but when I look back into the market, I'll say maybe 2024, 2023, I could not believe how far interest rates had risen. And I anticipated interest rates coming down, but with the rate of inflation, all the money injected into the economy during the pandemic, we're talking trillions, three times the amount of money that's ever been printed or was in circulation at the time. Three times that amount of money had been printed during the pandemic. So, with all that money in circulation, it decreased the value of the money that was already in circulation prior to all of that being printed, or three times the amount being printed. So, inflation, it's a tough thing, and it's going to affect all markets. It's going to increase volatility across the board, whether you're in stocks, whether you're in bonds, whether you're in crypto, private equity, the amount of money that people are lending and at the quality of lending, that being the actual interest rates, it's going to change drastically. But nevertheless, um, I think we're on a good path now with where the Federal Reserve Bank is going under their leadership. We will see. Uh, we will see. We'll see. It's only time will tell. So let's go into let's go into what to look for around the 2 p.m. to 6 p.m. hour. So what we'll do is get some more data, right? Uh, we're going to get um, oil news. We're going to get more geopolitical news around this time. Um, and so we may have a 2 p.m. catalyst, so we need to look out for it. So the Fed's Beige Book basically can reprice the growth of inflation um, narrative this afternoon about 2 p.m. Um, I wouldn't wait. I would wait until that actually is released. Um, that's going to change a couple of things. And it's funny because it seems that after Wall Street closes right now, we see a lot of information coming out about what's happening in the Middle East. So we need to be really careful about what we're seeing on the chart. When we look at these candles here, we see this big pump right here about 8:45 a.m. This was pre-market. This was pre-Wall Street market. And it's weird that you see this because the market manipulation is so profound and so noticeable and so blatant at this particular point that uh, we all know the system is rigged. But even though the system is rigged, we can find a way. We'll always find a way. So, but it's weird to see here now. We have this large candle right here. This means it's a lot of volume. Somebody spent some big money pre-market. That usually doesn't occur because people who have that amount of money, they are usually moving on some sort of insider information. So we're seeing a slow trickle down, though. There's another top player who probably bought in much lower who's decided to sell off little by little, systemically. But the amount of volume that this buy right here, this time frame, this 15-minute window in time, somebody spent some big money. And that big money in that 15-minute window is more volume. Let's say 30, right? Because it's two candles. We'll put those together, that's 30 minutes. That 30-minute window from 8:45 a.m. to 9:15 a.m. has been larger than the amount of money that has been made, that has been sold off during that time period by a significant amount. So that still leaves us with a tremendous amount of bullish upswing. The bottom has been reset. The bottom has definitely been reset with Ethereum. Uh, let's see where we are here. So we're steady getting it dumped though. Slowly it trickle off. And we're down to 1906. Let's see what Bitcoin is doing. Let's see. Bitcoin is still sitting pretty tough though. Let's see. All right. Okay. Mm, okay. All right. So it looks like we had a little bit of technical difficulties, but we are back. So, all right, let's see what Bitcoin is doing. Hmm. All right. So Bitcoin is getting into a little bit of bearish territory. However, our table still has Bitcoin in a relatively neutral position. Um, the price has come down. It's going to need to come down some more. We're going to need to be into the actual support zone. So when you look at these areas on the chart, this is our engine state emitter. So this tells us what's going on in the market, right? So it tells us a lot of support at 64.5. 64,500 has a ton of support here. And looks like our resistance is going to be around 6,505. Now, we're still relatively in a good space here with Ethereum and Bitcoin. We definitely can get up to, let's swing out of this 15-minute time frame. Let's swing out, let's swing out a little bit. Let's look at the daily. Let's see what the daily says. All right. So the daily has us pumping. We got a lot of resistance here. If we can get over 67.5, if we can get over 67.5 and stay, as long as we stay above 60K, we're in a good space right here. If we can get above 67.5, it is on. I mean, we're going to be in a full blown bull market and we're going to run. Once we get over 67.5, let's look back at Ethereum. Let's see what's going on. So on the daily, Ethereum looks really good. Like it's really shooting. It's really shooting through this Ichimoku cloud. All of this negative pressure, you can see. So when you get to the end of the Ichimoku cloud, it kind of tells you what the market is doing. It's basically saying we were below, I mean, the depths of hell. We were really in the dumps. I mean, in the dumps. And we have been pushing through it ever since June. And June looks to be the bottom. And that's not by chance, because that put us right around the first half, the end of the first half of the fiscal year. And one thing's for certain, two things for sure. If there is a downturn during the first half, there's going to be a rebound during the second half. And that goes into the election cycles coming up. I mean, these politicians really want to keep their positions. There's new ones that want to get in. So they want to make sure that they are propping up the financial markets. And they want to make sure that there's a strong sentiment of prosperity or potential for prosperity in America. So, what we're seeing though with Ethereum in the second half of the year has been a constant trickle up. I mean, look where it's shooting at. I mean, let's see how far I can really go up here. Let's see where it's pointing to. So we're pointing it like, and this is what? This is August. This is where we're angling towards. 2600 towards the end, second half of August. That's a big deal. You're talking about potentially 30% ROI within a little over a month. That's without leverage. That's tremendous. You could really make life changing money and ultimately make enough money to pay your bills, but you got to go about it a certain kind of way. Um, what we're doing here is we're just giving you the outlook. So I would say, man, 2600, I wouldn't even necessarily put it in August, right? Because things are going to change. There's going to be volatility. There's going to be all kind of current events, world events, geopolitical tensions that are going to come into the play that are going to be devastating and game changing, quite frankly. So, with that being said, we still have a very, very good chance of hitting 2600 sometime between August and October. And if you're getting in now at 1900 ish, yeah, you have some potential. You're gonna have a nice holiday season. And ultimately, that's the goal. And that's what I'm trying to support with you all. Just trying to make sure you all understand the market, how not to cheat yourself. So let's go back to a more of a in the now moment though. Let's keep it relative. Let's see. All right. So the 15 minute, the resistance level did come lower, but our support stayed the same. This bar or this graph right here, this area that you see right here, it continues up here, spikes way up here. This is your resistance line. Now it's something to say that the resistance line did lower, but the support line remained the same. Currently, what we're seeing in our table here, let's break down the table here just so you all know. So currently what we see here, you have several pieces of data on the far left-hand side of the table here. You're going to see the state. This HTF acronym is for high time frame. So what is the state of the market during the high time frames? We're talking 1 day, 1 week, 1 month. Far time frames out the market state. So the regime is the New York Wall Street hours. So this is New York. So that's going to be the regime. You may need to check out one of my other videos on the channel where I break down why crypto changes in the 24-hour window. So simply put, you're going to have investors in all over the world, but they function on a different time frame. They sleep when we're up and we sleep when they're up and so forth. And what happens is those individuals have their own sensibilities. They have their own interests. They have their own um, government leanings and just way of life. So what happens is there's a finite amount of liquidity for each of those cycles. And if we know how much money could potentially be spent or could be kept and how few dollars can be spent or capped, we can also have ability to take advantage of that knowledge. So, but I digress. Um, what we see is the DVWAP, and so the DVWAP is uh, the value per day of the asset. So let's say this. I'm just kind of oversimplified because I don't want to get people lost in the sauce. So the daily value of an asset. So basically, what you're seeing is this. Let me break it down more in layman's terms. So the current price of Ethereum is $1,913. This tells us that it's above the DVWAP, right? So the value of the asset, right? No matter how much it fluctuates, there's a certain value for that particular asset. And on a daily basis, this tells us that it's above the daily value. Now, and this is the W right here for the WVWAP, is this is for the weekly value. Now, this is tells us the micro state of the market or the asset and how it's fluctuating. Right now, we're in a micro bull market. It's a short-term bull market. Beneath that, we have a long section. And this tells you whether the long opportunity is a strong long or weak long. There's a scale from 1 to 10, excuse me, from 0 to 10. And basically, that scale tells us the value of a long or the value of a short position. Now, right beneath that, you see the short. And this one right here, you can't see so much. This is the RSI. And basically, it tells you how much things are, how much an asset is overbought or oversold on a scale of like 100. So right now, we're kind of at a neutral state. We're at about 52% or 52.3. And basically, that tells us that we are we have a little bit of room, excuse me, 0 to like 80 is where you kind of want to be. Anything outside of that, yeah, you might be in trouble. But the RSI right here is about 51, and it tells us whether the asset is overbought or oversold. The RSI is really high. That means you're getting to a point where the asset is probably oversold and people are going to start to sell that asset. So, but yeah, let's take a quick break. We'll come right back and get back into it.